Let AI Make You Rich, the lazy guide to stock investing.
I used to think that making real money in the stock market was only for two kinds of people: Wall Street wizards who could practically see the future, and lucky gamblers who just happened to bet on the right thing at the right time.
For the rest of us, it felt like a game of high stress, constant second-guessing, and that nagging fear that one bad day could wipe out months of hard-earned savings. I've been there, spending way too many nights staring at charts I didn't really get, drowning in analyst reports that all said different things. It felt like trying to solve a puzzle with half the pieces missing. Everything changed when it clicked. I wasn't just up against other people, I was up against machines. Machines that never sleep, never panic, and can process more information in a second than I could in a lifetime. And that's when I realized, if you can't beat them, let M do the work for you. So, I outsourced the hard part and built my own lazy money-making system. It's a simple setup using a couple of powerful AI tools to do all the heavy lifting. I got it running in under an hour, and it completely changed my approach to investing.
In this video, I'm going to show you step by step how you can build your own lazy investing guide and finally let AI take over.
Section 1. The Lazy Philosophy. Why AI beats you at this game. Let's be real. As human investors, we're often our own worst enemies. We get caught up in the hype and buy at the very peak. We see a little red in our portfolio and immediately panic sell at the bottom. We're driven by fear, greed, and a serious case of FOMO. Those emotions are absolute portfolio killers. Artificial intelligence doesn't have any of that baggage. It runs on pure data, logic, and probability. It doesn't care about a scary headline or a random tweet from a billionaire. Its only job is to analyze millions of data points, company earnings, economic reports, market trends, to find patterns and opportunities that are basically invisible to the human eye. It works 24/7, tirelessly scanning the market for just the right conditions. For the lazy investor, this is the ultimate cheat code. You get to outsource your worst instincts to a machine that is better, faster, and more disciplined than you'll ever be. And we're going to do this with two incredibly simple types of AI tools that anyone can get the hang of. First, the Robo-Advisor. Think of it as your automated portfolio manager. You tell it your goals, and it does literally everything else. It's the set-it-and-forget-it foundation of our lazy portfolio. Second, the AI Stock Screener. This is your personal stock-picking genius. You give it simple instructions in plain English, and it scans thousands of companies to find the hidden gems that fit your exact rules. Together, these two tools automate over 90% of the work. Step 1. Building your core with a Robo-Advisor, the 80% solution. This is where the magic starts, and it's the most important piece of our lazy strategy. The core of your portfolio, about 80% of it, is going to be managed entirely by a Robo-Advisor. A Robo-Advisor is an AI-driven platform that builds and manages a diversified portfolio for you. You don't have to pick a single stock or fund. The AI handles it all based on a quick quiz you take when you sign up. It'll ask about your financial goals, like retiring or buying a house, your timeline, and how much risk you're comfortable with. Based on your answers, it automatically builds a portfolio designed to get you there. This is perfect for lazy investors for 3 reasons. Dirt cheap. Many of the best robo-advisors charge little to no management fees, especially for smaller accounts. Anyone can start. You don't need a fortune. Some platforms let you start investing with just $10. Completely automated. The AI automatically rebalances your portfolio to keep it on track and can even handle complex tasks like tax loss harvesting, all without you lifting a finger. So, how do you set it up? It's a simple 3-step process that'll take you about 20 minutes. First, pick a platform. As of early 2026, some of the top names for beginners are Fidelity Go and Schwab Intelligent Portfolios. Fidelity Go is fantastic because it has no advisory fee for balances under $25,000, and you only need $10 to get started. Schwab Intelligent Portfolios also charges no management fee, but it does require a higher minimum of $5,000. For this example, let's roll with Fidelity Go because its barrier to entry is incredibly low. Second, take the quiz. This part is actually kind of fun. Like a personality test for your money, it will ask things like, if the market dropped 20%, what would you do? Or, when will you need this money? Just be honest. The AI uses this to build a portfolio that's a perfect match for your risk tolerance. Third, fund your account. Connect your bank and transfer your starting investment. And remember, you can start with as little as $10, and that's it. You're done. The AI takes over from here, investing your money into a mix of low-cost funds that might cover stocks, bonds, and real estate, giving you instant diversification. Your lazy, automated portfolio core is officially up and running. Section 3, Step 2, Finding High-Growth Stocks with an AI Screener, the 20% Fun Money. Now that our core portfolio is safely growing on autopilot, we can get to the exciting part, using the other 20% of our money to hunt for those high-growth stocks. This is where our second AI tool comes in. The Stock Screener. An AI stock screener is basically a superpowered search engine for the stock market. Instead of you spending days digging through financial reports, you can just tell the AI what you're looking for in plain English, and it will spit out a list of matching companies in seconds. Imagine telling a team of analysts, "Find me tech companies growing their revenue over 30% a year with low debt, and whose stock isn't already ridiculously expensive." That research would take them ages. An AI screener does it almost instantly. As of 2026, there are a lot of great tools out there like Tickeron and Kahoot that are still going strong. Many of these screeners have features that analyze chart patterns or let you ask questions conversationally. Let's walk through a simple, lazy way to find a promising AI-related stock. First, open up your AI screening tool. A lot of them have pre-built screens like top momentum stocks or undervalued tech, which are great starting points. Second, set your filters. We'll keep it simple with 3 rules. Sector, select technology and then drill down to semiconductors. These are the companies building the chips that power the whole AI revolution. Growth, set annual revenue growth to be greater than 20%. We want companies that are expanding fast. Valuation, filter for a price-to-earnings (PE) ratio below the industry average. This helps us avoid stocks that have already been hyped to the moon. Third, run the screen. The AI will churn through thousands of stocks and give you a short, manageable list of companies that fit our exact rules. Now, these tools don't have a crystal ball. While some use AI to find patterns and calculate the probability of success, it's not a guarantee. Think of it as using data to stack the odds in your favor. From there, you can take the top name or 2 from that list and invest your remaining 20% through your brokerage account. This part of your portfolio is your calculated bet on high-growth sectors, but it's a bet that has been heavily de-risked by a machine that has already crunched the numbers for you. So, what does this actually look like? Let's say you're starting with $1,000. Here's how you'd set up your lazy AI portfolio. 80% of your money, or $800, goes straight into your robo-advisor account, like Fidelity Go. You don't touch this. The AI manages it for you, spreading it across hundreds of different investments to keep it diversified and safe. This part of your portfolio is designed for steady, long-term growth. As part of its strategy, the robo-advisor might even automatically invest for you in broad AI-themed ETFs, like AIQ or Robo, which are still popular options in 2026. The other 20%, or $200, is your fun money for making targeted bets. Using your AI stock screener, you found a promising semiconductor company with strong growth and a reasonable price. You take that $200 and buy shares in that one company. This gives you direct exposure to a high-upside part of the market without putting your entire nest egg on the line. This blended approach is the heart of the lazy method. You get the stability and automated management of a robo-advisor for most of your wealth, plus the explosive growth potential of a few carefully selected stocks that an AI helped you find. Now let's get real for a second. This is not a magic guaranteed money printing machine. AI is an incredibly powerful tool, but it does not predict the future. The stock market is, and always will be, volatile. We've all seen how unstable and choppy the market can get, with economic conditions and global events causing big swings. There are always risks involved, and you should only invest money you can truly afford to lose. And past performance is never, ever a guarantee of future results. And of course, I am not a financial advisor. This video is for educational and entertainment purposes only. The goal of this lazy system isn't to get you rich overnight. It's to build a disciplined, automated, and stress-free process for building wealth over the long term. It's about using technology to make smarter, less emotional decisions and most importantly, to save you hundreds of hours of work and anxiety. The lazy way is the smart way, because it's a strategy you can actually stick with. So let's recap the 2 simple steps to your own lazy AI-powered investing machine. First, you put the bulk of your investment, around 80%, into a low-cost robo-advisor like Fidelity Go. You set it up once, and the AI does the rest, giving you a diversified, automatically managed core for your portfolio. Second, you use the remaining 20% to hunt for high-growth opportunities with an AI stock screener. You let the AI do the heavy lifting of finding promising companies, so you can make a few targeted bets without all the guesswork. That's it. In less than an hour, you can set up a sophisticated investing system that outsources the hard work to machines that were literally built for it. No more stress, no more drowning in data, and no more emotional decisions. You are now officially a lazy investor. If this lazy guide was helpful, do me a favor and hit that subscribe button. It tells the algorithm you want more content just like this. In my next video, I'm going to show you how I use a different set of AI tools to analyze news headlines and spot market trends before they go mainstream. You won't want to miss it. Thanks for watching.